Hey everybody, this is Kevin Brinkman, and you're listening to the Brinkman Report. I'm fortunate to have Russell Hedman and Sasha Stern on with me to talk 2025 predictions. These are the two most thoughtful and intelligent people I know, and I'm excited to hear what they're predicting for 2025. Russell, would you mind giving a quick bio?
Yeah. Hey, I'm Russell Hedman. I'm from Denver, grew up here. I went to Boulder, and then I went to Harvard Law School. I practiced in New York for a while, in Hong Kong, and then today I practice in Denver. My work is mostly working for private equity and family offices. A lot of my work is investing in sports, which I'm sure we'll talk about later. But when I'm not being a lawyer, I am a constant collaborator with Sasha on a lot of projects, including we have a local politics YouTube channel called Two Guys, One Ballot. I'm gonna turn it over to Sasha.
Hey everybody, I'm Sasha, longtime Denver resident, serial entrepreneur. I run a startup called Goalie. We make software for kids with ADHD and autism. I'm gonna keep my introduction brief so that the audience can just judge me on the quality of my contributions here.
As your lawyer, I would not advise you to do that.
I'm not gonna tell them where I went to school. They can just guess which Ivy I went to.
the Ivy of the Mountain West, right?
Yeah.
Thanks for coming on today, guys. I appreciate it.
Thanks for having us.
I wanted to start with a little bit of lightning round here. And so I'm just gonna ask some quick questions with ranges and love to get your answers. So a lot of our audience is kind of business, real estate folks, so they're very interested in these economic variables. So first, at the end of 2025, where do you see the 10-year treasury? It's 4.57 today. So do you see it under 4, between 4, 4.5, 4.5 to 5, or above 5?
Under 4.
Sasha, what do you think?
Under 4, for sure. 100% under 4. Put all your money on that.
So this is go ahead. Subdued economy. Is that what you're saying, Sasha?
I'm saying that too many real estate guys are in trouble if it stays above 4, and somebody's gonna have to rescue them.
So that would mean Fed funds rate comes down, right? So maybe let's just go there. Where do you think the Fed's funds rate? I just looked at Polymarket, and it's basically 15% believe 0 cuts this year, 24% 25 bips, 24% thinks 50 bips, and there's almost 15% that are over 4 cuts at 100 bips. So Sasha, you think how many rate cuts you think?
I think we're going to have real pattern-breaking economic behavior this year. I think GDP is going to grow at over 3%, but employment will not grow. Employment will remain the same. And consequently, the Fed will have more leeway to make cuts. And so I think there's going to be 1 or 2 cuts, and then maybe some form of quantitative easing.
Oh, wow.
So but if you're seeing multiple cuts and quantitative easing, what, high inflationary environment?
No, it won't be an inflationary environment because employment's going to drop as well relative to where we are today.
Let's hit that too. So CPI last read was 3.2% in December. Fed's goal is 2, right? So where do you see CPI going to into next year?
I think it's going to stay about the same, maybe drop a little bit. Like, I think it'll get closer to the 2% mark. But I think people are going to deploy a lot of capital this year. And so it's going to be hard for CPI to like really drop below the 2% target or hit the 2% target exactly.
What do you think, Russell?
Sasha has far more nuanced and interesting takes on this. And I'm, but a lawyer, right? So I'm always adjacent to these discussions. I'd say I expect CPI to go up a little bit, maybe stay even, maybe go up a bit. I think you'll have some labor supply impact. And I think also there will be a lot of economic activity. So I think there'll be a lot of money chasing goods and services, and there just won't be as much labor, generally. There'll be some that'll be offset with like efficiencies through AI, and then a lot of the AI stuff is going to be overblown in terms of immediate efficiencies.
Yeah.
And then in terms of like interest rates, it's going to be hard to do more than one cut. It's my kind of gut feeling, especially given that I think inflation is not going to be easy to necessarily control. Treasuries, I don't know, maybe between 4 and 4.5. I'm not sure.
Yeah. My take is, I think that if you take out owner's equivalent rent, or if you calculate it the way maybe all landlords see what rent growth has been, I think we're already pretty close to that 2% target. So I think we're already going to be there on inflation. So I don't see that as a big a concern as so many other people. So I think the Fed will
So are you
have
saying
the ability.
CPI will get down to the target, or you're saying okay,
If
CPI
you
will get
strip
down to the
out
target?
owner's equivalent rent right now, you're already there. Like
Got it.
owner's equivalent rent, I think showed it as like 4 or 5% increase, and it's basically been flat over the last year, and it's just how they calculate it. So I think the Fed has a little bit more room in my mind, and I think just these high treasury rates, after a 100 bip cut from the Fed, treasuries actually run 100 bips, so it's almost equivalent of the Fed raising 100 bips over the last, however many months. I mean, I agree with Sasha a little bit. I think it's going to be a softer labor market. So softer labor market. I'm thinking maybe treasuries maybe between 4 and 4.5. But yeah, I've been wrong a lot of times for the last couple of years.
So where do you see GDP?
I don't know. I think it could be above 3. I just think with a lot of things that are going on in administration could really help growth, in my mind.
I can't make out the case for GDP going up. There will be impact on labor supply. Like there absolutely will, whether that's H-1B, whether that's like, farm labor, right? Like there will be impact on labor supply, construction labor. How is there a world where GDP is, shooting up, either rocketing, or at least, trending up? Are you just seeing no impact on labor supply, or what?
I just think there's more money out there than there's ever been in the history of our country.
Right.
There's all the equity markets are at all-time high. There's more money in treasuries and bonds than there's ever been. There's more even just in money markets. There's usually a couple trillion in money markets. I think there's like 5 to 6 trillion in money markets.
Kevin, let me play the other side of that. That's like all of that, all those assets are held by, let's say, like the top quartile of Americans.
Yeah.
But a lot of our economy is consumer driven. And like we really need people to go to the movies and eat at McDonald's, and that's like, that's done by 100% of the economy.
Yeah.
So does that really is consumer behavior gonna be bullish? Like most people don't care about the stock market.
Yeah, and that's one of my main concerns. Just, we're in the real estate business, and can every demographic afford rent right now? And it's people are getting more and more squeezed on the bottom end for sure. But at the same time, you can just take a couple trillion out of money market, and it makes up for all that. So I think there's some runway for sure.
But if I think back to 2021, when you basically also had equities at these, at the time people were saying crazy highs, right? Like you have equities, public companies could pull down capital off the markets really easily. Debt was free or super cheap, right? Private equity could invest. And at that time, I mean, we were, good supply was choked by, COVID issues, right? But on labor supply, it was crazy. I mean, I remember at that time, PE sponsors were talking about literally whether they needed to build in-house QOV capabilities because they could not hire accounting firms. They would go to all the accounting firms and just say, I need someone to diligence this deal. And it was impossible. They couldn't hire an accounting firm because it was that tight. And law firms, I mean, I can't even imagine between then and now, like probably, we've jumped 12% year over year or something like that, right? In fees. So if you're saying all this capital, there's going to be all this capital available, a lot of it will get deployed, all this activity, you turn around and I'm not going to say it's a huge part of the labor market, but like H-1B is a real, right? Like piece of this. You go further down, like there is immigrant labor that will be choked at kind of at unskilled levels too. Even if you took that out, though, shouldn't you see tightening of the labor market?
Yeah, I mean, that's my big concern for construction, development, and real estate, that tariffs will increase the cost of material. I mean, construction is basically materials and labor, right? So tariffs could really bring up the cost of materials, and immigration policy could really increase the cost of labor.
Yeah.
And so that's our whole investment thesis, buying existing, because we believe everything's going to be more expensive in the future.
That's a good way to work in that plug. I like that.
I have a tough time translating all of the moving parts into GDP, though. I mean, what do you think, Sasha?
I think there's a real split between blue collar and white collar work.
Yeah.
Blue collar labor is going to continue to be tight. The Brinkman investment thesis will be beautiful, but in the white collar world, I disagree with Russell. I actually think people are underestimating the impact of AI and how many jobs in corporate America are kind of like these, somewhat low skill jobs that are low throughput jobs that are just kind of already unnecessary. Like they were barely necessary to begin with. And with someone else being 50% more productive, now they're definitely not necessary.
Okay, Sasha, let me put this hypothetical for you. Let's use lawyers since I'm familiar with it, right? Okay.
Uh-huh.
So in a world where lawyers are hired to do, let's say, negotiations for you or diligence someone else's work or whatever, right? You hire your lawyers, they hire their lawyers. Like, do you think that when the internet made research really easy, legal research really easy, do you think people just said, oh, great, I can hire less lawyers and pay them less? Or do you think that spiked, everybody suddenly was armed, like the other side was armed with their lawyers plus internet? Now my side needs to be armed with lawyers plus internet.
Yeah, let me step out of your realm because I can't argue in it. I'm stepping into the software realm.
Good tactic. I like that.
Yeah. Let me just like sidestep your question. In the software world, what we're seeing is the floor and the ceiling for skill have risen. People don't want to hire junior software engineers anymore because they're saying, look, the AI can do like 90% of what a junior can do. And at the same time, the ceiling of what a senior person can do is grown tremendously.
Right. I think presumably now includes building and developing AI tools, right? Or integrations for them.
Yes. So in the software world, I think there is a labor recession already happening. And I'm not arguing that there's going to be less demand for software. I think there's going to be more people saying, hey, let's build our company custom tools. I think there's going to be more people that spend more money on software in general. So my argument is that a firm like yours, when push comes to shove, and you're going to be faced with this question of like, do I want to hire new juniors? I think there's going to be a decision point in the future where you say, actually, no, because I can just be 50% more productive.
Interesting.
And what does that equate to GDP in your mind, Sasha?
I don't know that we're going to see it in GDP this year. What I'm seeing is that all these companies are last year and this year, everybody's kind of like in this experimental phase, and they're just now beginning to productionize what they've learned. So I think in the law firm world, people are just kind of like experimenting. What can we do with AI? They're testing out all sorts of tools. And just now, the most tech forward of those people are saying, okay, we actually like find some use cases here where this does actually make our people more productive. These other use cases is too risky, it hallucinates, it's not worth our time. But they're going to really adopt this year, or at least like the front end of the curve of adopters will adopt this year a bunch of AI tools in their businesses.
We're just thinking, how about deregulation? I know Trump in his inauguration speech at the Rotunda yesterday said drill baby drill and the national energy emergency. I mean, if oil and gas comes down in price, isn't that just a lot more resources maybe the lower end of the spectrum can spend in our economy?
Russell, what's your take on that?
I mean, narrowly talking about oil and gas, I think the answer is obviously yes, right?
Well, what impact does deregulation at the federal level have on your client's ability to like bring new inventory online for whatever they're working on?
Yeah. I think it really depends. Generally speaking, regulation, you know what, let's break that up a little bit. Regulation in and of itself is not something that I think participants in any market really oppose. And I think you could look at market participants building their own regulations. You could think about things like FINRA, right, that are like non-government regulation, or the way that the exchanges regulate, right, participation on the exchange. I mean, exchange rules go well beyond what the SEC requires, right, in a lot of respects. So I think regulation in and of itself is not sort of the enemy of a high functioning market. I think it probably is part of it. I think what people got really frustrated with in the Biden administration, but I think just generally maybe the last 20 years of American regulation, is that the regulations have become really hard to interpret, and in some cases aggressively enforced. Even to the point where you see like agencies overextending themselves to enforce something that they actually ultimately at the end of the day will have a very hard time enforcing, right? I'm not trying to make a political statement on that, right? I'm just saying if you look at the FTC's and DOJ sort of track record for trying to block mergers, right, the last 4 years, it's bad. It's a very bad record. They had a handful of high-profile losses in a row as the FTC was trying to use vague language to block mergers for antitrust reasons on the basis of, for example, one of the big ones was the impact on labor. Right? They were saying like, look, labor is a market. FTC is supposed to ensure fair markets. The fact that this will have an impact on how workers are treated in these so it's sort of it was this broad extension that no one on the front end really anticipated the regulator would use. So I think in a world where we are today, there are a lot of broad regulations or opaque regulations that have been really hard for market participants to decipher and kind of weaponized by administrators, not for political purposes necessarily, but just like, to expand administrative power.
Russell, let me
wrap that up. To wrap that up, what I'm saying is that kind of regulation, eliminating it is probably very good for economic, and when I think about like my clients bringing things to market, right, that eliminating that kind of what I call useless regulation or wasteful or overly broad or restrictive regulation is probably very good for them.
I agree with everything you said. I think there's more impactful second order effects though. So despite the fact that the FTC is losing all these cases, M&A activity did freeze, right? Because there's a vibes aspect to it. It's like, hey, there's risk of us getting this deal challenged, so we're not going to do the deal. Would you agree with that?
I think that the FTC's impact on mergers not going through outside of their focus areas is really overstated. Meaning, I don't think, for example, the FTC challenged, or they went through a second request with the acquisition of a ski resort this year, right? But like ski resort M&A on the whole was not down because of that. So I think the FTC is in many areas just doing its normal thing. I don't think, and people are saying sort of, oh, all M&A is down because the FTC is really scrutinizing all the tech acquisitions. Like, I just don't think that's accurate. I think the broader M&A market has been depressed for a while. And if you look across PE, the funds that are like they're not in tech, they are also holding a ton of inventory, having a hard time in some cases doing exits, right? And so that probably says to you like, it's FTC, DOJ is a great scapegoat, but that's probably not what's really jamming up the M&A markets.
Great point. Let me finish this thought more thoroughly, and you tell me if you think I'm wrong. The way I view it is there's this first, second, and third order effect of regulations. The first is just like, here's the rules, and that's probably like where the lawyers are interacting with it. Can we enforce the rules? Can we interpret the rules? The second order effect is like participants in that market altering their behavior because of the rules or threat of new rules. And then the third order effect would be how do young people, like, what are the vibes more generally? And so like, you know, are there new people who want to, are there like college grads that want to like start a company that builds electrical transmission? And the answer is like probably not, because they know that like the next 20 years of their life will be like stuck in some kind of regulatory hell. And instead they're like, yeah, I'm going to go to a software company because there's no regulation in software. So it's like there's this like the immediate effect, then there's this like, let's call it like multi-year effect. And then there's this like multi-decade long effect where these industries just like have no talent in them, and so little capital wants to go in them. So now it's like if you start unwinding some of the psychological impact today, we might actually see the benefits like 10 years from now.
I want to move us along because one of the main things
It's enough
I'm
vibes,
interested
Sasha.
in, I think we've maybe hit this miraculous soft landing that not many people thought we would 2 years ago. Interested in the back of your minds, what's a potential black swan that could take us to negative GDP growth and put us in a recession this year?
Russell?
Why do I have to go first?
All right, I'll go first. I think the black swan is political risk. And the thing that I could think of most concretely would have been something like a constitutional crisis where perhaps blue cities and states um, challenge the federal government in a way that it hasn't been challenged before, and really makes people question the rule of law here.
So Sasha, you should say a little bit more about that. Okay, or Kevin, are we still in the lightning round?
No, we're doing whatever you want to do.
Okay. Because I want you to set that up the best you can so that I can shoot holes through your very silly idea.
Yeah, sure. All right. So suppose the Trump administration says, we're going to accelerate the development of nuclear power. And we've chosen these sites on federal land where we want to do that. And imagine a world where like some of those sites are in California, and California goes into an uproar because it wants no new nuclear power. And the government arrests in California. The California state troopers arrest the Department of Energy staff as they're scouting the land.
Like, so this kind of thing. Thank you, Sasha. Great, really appreciate that. This kind of thing, the idea that state and federal policy, incentives, enforcement efforts, etc., would conflict, has been like since the founding of the United States, right? This has been one of the major focuses of American jurisprudence, right? The federal system. So I don't have any particular, like, this is one area where like the institutions are set up to handle it really well. There are like, and the rules are complicated. It's like reading the Dungeons and Dragons rule book or something, right? It's like if the federal regulator if it's an issue, if it's a major question doctrine issue, it goes through this stream, right? If it's a blank space where the federal government hasn't regulated, then it goes through this stream. Like, so there's a whole body of law that's widely accepted, and states and federal government conflicting, just that isn't new. I don't think you could maybe have a flash in the pan, but I don't think anything there gets you to constitutional crisis. I think when you think about constitutional crisis, like I think about there is the Constitution, there is someone who will not follow it, and there is nothing that other people can do about it, right? And when you and I talked about this before, I told you, like, for example, you could imagine, right, like Trump orders a military action in Mexico against cartels. Maybe there's concern about civilian death or something like that, and the military refuses the order, or something like that, or the National Guard in some state confronts the American military or something like that. That is the kind of thing nobody can really, whoever has the guns, nobody can force them what to do. That's the kind of thing I think could lead you to a constitutional crisis. I don't think like internal policy difference on like whether we build a facility here or not.
I think we're saying the same thing, because what I'm saying is like, yeah, the courts work it out, and Gavin or Newsom or whoever in California is like, no, I'm going to keep these guys in jail. I don't care what the courts say. And it's a black swan because it's an unlikely event. I'm not suggesting that this is probable.
Yeah,
Yeah,
at the
yeah,
same
yeah, of
time,
course.
Ray Dalio talks about the probability of another civil war in the US, and he doesn't say, two armies going against each other, but it's different cities, different states that aren't living up to, if it's federal laws or whatever it might be. And I could see a decent chance of that happening in certain situations. How about you, Russell? What's on your black swan list?
Um, I'd say maybe like some kind of issue in the insurance markets. I'm trying to like avoid what I think are some more obvious ones, but issues in the insurance market. So, I can't exactly draw you like the step by step, but I think like California wildfires and insurers maybe not being bailed out by the federal government or otherwise like the kind of second order effects of collapsing insurance companies. But I don't think it's just California. I think I think there's a lot of tension over like health insurance also. And the way I would link these is we're kind of in this situation where insurers have priced policies based on a set of criteria, right? I'm sure it's underwritten pretty well. But like in California, there are a lot of policies written that say things like you can't have this kind of tree on your property, and everybody has these trees on their property because the trees are a fire risk. And so you're sort of like faced with this injustice of like, but my house burned down, right? And there's going to be like a societal impetus on these insurers to pay out. At the same time, there's like, the reality of the financial market, what was underwritten. I think about the same thing on healthcare. People get very frustrated, right? We saw like the recent murder of the, United Health executive. It's like, it's really awful. And I think that some of the tension underlying it is because the insurers have, underwritten health insurance policies based on a criteria. They try to follow those, but then people end up in situations where they're like, why does pre-authorization matter? I needed this health care. Why can't I get this under my policy? And it's sort of like, and it feels, when you hear these stories, you're like, oh man, it feels awful. At the same time, like the reality is the insurer is following whatever the policy says. Yeah. So I think there is tension right now between what the insurance markets have actually agreed to bear and what the reality of the costs will be. And I think like California could maybe be some kind of, spark.
Yeah. Yeah, I agree with that on property insurance for sure. Could be California, could be the hurricanes in Florida. I was thinking even just individual cabins all through the mountains.
Yeah.
It's just, if you're an insurance provider, why would you take the risk on that when there's, plenty of other property out there to insure? And then if insurance companies aren't willing to go there, then you can't get a mortgage, and then it's just kind of a doom loop. So
excuse me. I thought this game was Black Swan game, not
insurance
risk.
Inconvenient for Kevin. Real estate portfolio.
The obvious one definitely is tariffs and immigration policy, right? And I think that's a white swan that's flying in front of us right now. Love that
tariffs have become a white swan.
Yeah.
What does that even mean?
More obvious.
Most swans are white, but the rare black swan is, the rare swan is black. So it's like, this is something predictable that we can see ahead of us that will be really.
How about geopolitical? What do you guys think happens in Ukraine this year? And is there any other kind of new conflicts this year that we're not thinking about?
Hard to say about new conflicts, but if you made me bet, I would say that things actually meaningfully calm down this year. I think that the Russians and Ukrainians reached some kind of truce. And at the time of filming this, we already see that the Israelis and the Arabs are making some kind of truce over Gaza.
Mm-hmm. Yeah, I saw an article this morning saying like Hamas is back out parading the streets in Gaza. It's sort of like back to some new normal, stable situation.
Yeah, they're celebrating their victory.
Yeah, after just one day, right?
Oh God. So it's like so hard to like think about this stuff abstract for me because I just think that like living through any of these wars as would just be such a miserable experience. I have no sense. Like I think in Ukraine, they to Sasha's point, like there's obvious markings of like some deal should happen now, right? Like Ukraine should not be so confident in Western support. They probably need to come to the table, right? Or there's much more of an impetus to do that. But also at this point, they're like dug in. They're fighting a lot of the war with cheap weaponry. That one's really hard to predict for me. I think I lean towards a deal getting done. Yeah, go ahead.
For new conflicts, I think there's risk in a part of the world that, like in America, we don't look that much at it, and it's probably something like India, Pakistan, or Pakistan with other neighbors, where there's a lot of economic insecurity in Pakistan, and they've got Taliban on one side, they've got Iranian mullahs on the other, and they've got their foes, the Indians, on the third. I think that's where something could spiral pretty quickly.
Yeah.
But I'm not sure what economic effect that would have on us.
Yeah, I was surprised. I don't know if you listened to that Peter Linneman this week, but he thinks that the Ukraine conflict added 20 to 40 bips in the U.S. GDP, just from, I guess our agricultural market picked up, our oil and gas market picked up, our weapons industry. So it's
but I think is that real GDP? Because I think so much inflation can be attributed to that as well.
Yeah, which of these are horrible conflicts, but it's. I remember when that started, everyone thought that there'd be, starvation across the world because of all the agriculture that happens there, and it just seems like a lot of other countries have stepped up their production.
Yeah, what's the lesson? What's the lesson for the 10 millionth time when people say we're all going to starve? Markets just work it out.
Yeah. What's your probability of China going to Taiwan this year?
0. Yeah.
Quite low.
That's good.
NBA is going back to China this year, though.
Well, let's talk about sports. I know, Russell, you spent a lot of time in the sports world.
Yeah.
What are we peak valuations?
No.
Or what do you think of the future?
We're not peak. We're definitely not peak. We're definitely far from peak valuations. So I spent a lot of time talking sports investment, and you mentioned the Broncos. I think you called it the Walto Penner, but it's the Walton Penner ownership group, the current owners. I worked for them when they did the buyout. But I've done like I've worked on a lot of different team buyouts, acquisitions, investments. It's kind of day-to-day a big focus for me. First of all, there'll be some eye-popping deals announced this year on top of what's already been announced. But I think Sasha and I often go back and forth on, the outlook of sports team valuations. And just to give like a little bit of context, right? Like when the Clippers were sold, people were marveling at the idea that they could be worth $1.5 billion or over $1 billion or something like that. We did the sale of the Brooklyn Nets in, I think 2017 and 18. At that time, the Nets were valued just over $2 billion, and everybody was like, Joe Tsai, one of the co-founders of Alibaba, was the buyer, and people were like, wow, this is so. They would have never found another buyer at this amount, and et cetera, et cetera. And then I think this year, according to press sources, Joe sold some portion of the team to the Koch family at like a $5 billion valuation, right, or over 5. When we did the Broncos deal, press reported that we paid maybe $4.5 billion, right? The next year you saw Commanders at 6, and then this year you saw valuations of Dolphins and Eagles reported to be closer to 8, right? So Sasha's just been continually wrong about this. His theory has been that somewhere there's going to be some sanity in the market. But my position to Sasha has always been the core driver of sports team valuations is there's a supply and demand. There's a market set up with supply and demand where supply is the number of premier sports assets in the world. It's a flat supply. Generally flat. We could talk about women's sports, which is actually really interesting. That's the first supply relief in a long time. But it's generally a flat supply on premier sports assets. And then the demand side is number of billionaires in the world interested in American sports teams. And that is domestically, wealth concentration is increasing. There are more and more billionaires willing to pay more and more for these assets. And then internationally, right, you have new classes of buyers. You have Chinese buyers. You have buyers from the Middle East. You have buyers from anywhere in the world. They want American sports assets. And then the leagues have started opening the door in the last 4 years to private equity, 5 years to private equity.
Mhm.
So you have another new class of buyers. So I'll
Russell,
rest
let
my
me ask you
case
about
there.
the supply.
Yeah.
Is college sports professionalizing resulting in an increase of supply? Is that supply relief?
No, great question. Not for like team owners, right? Because you don't, unless you're going to buy Stanford University, you don't own the Stanford University's college team, right? It's not for franchise ownership, right? College sports professionalizing isn't adding new supply to the sort of ownership demand market.
Can you see that changing if Stanford thinks they can pocket hundreds of millions of dollars for selling their whatever golf team? Would they do that? Like
Or
just
even the
license the
revenue,
Stanford brand?
or even they're taking more revenue from other professional leagues.
Have they
Like, I'd
taken
rather
revenue?
watch
Have they taken
college than
revenue?
pro.
Well, notice that revenue was not in my equation of supply and demand, by the way, right? Which is, so this is something that people are always, in my mind, a little bit kind of like to trying to apply traditional. They're like, how much revenue does the Mona Lisa bring in? It's like it's not a Mona Lisa. That's not the play, right? The Mona Lisa has value because it is limited in supply, and it is the Mona Lisa. So that's like you could talk revenue. I'm like, I'm not really sure what that does. And there are, but by the way, there are people in the very sophisticated operators in the sports world who are like, I figured out ways to get more revenue, right? I figured out how to sell more tickets to the Mona Lisa. I'm like, okay, great. I don't know that really changed the Mona Lisa's value, but like, I'm happy that you've done that, right? So yeah, I think when you look at college sports, you probably have, my view is de minimis impact on sort of like the supply demand market for team ownership. And if universities started selling teams off or something like that, I mean, Brave New World, but I don't see it. That would be a black swan event.
Russell, let me tell you why you're wrong. Okay, so your part of your thesis here depends on more billionaires wanting to buy these teams, and I feel like that's a really fragile thesis. Today it holds true, but objectively, these are horrible assets to own. Like they're very political, they're very public. In some ways, they're political with cities, and you've got like hundreds of thousands or millions of literal fanatics that love you or hate you. So how long until team owners get like a literal pie in the face in the street for something they did, or
I mean, some of
worse,
that
something
definitely
happens to
exists
their
already,
family or
right?
something like that,
Yeah,
and they say, owning a suite is great. I don't have to own the whole team.
right. For the
So
price of 1% of this team, I could buy every floor seat in the arena for the next 10 years, right?
yeah. So I think like as soon as something happens that really illuminates to people that this is a bad asset to own, like bad for your lifestyle, then I think the market loses lots of bidders all at once. And then when I look at what's going on, like from an attention standpoint, if I think about like what was the coolest thing to watch on TV in the 80s? What was the highest action thing to watch in the 80s? Maybe in the 90s. It was probably like an NBA game or a football game. And if you think about what kids have to watch today, like an NFL game, it's just like the least interesting thing to watch on a screen. But they're interested because like their friends and their family are interested. But in terms of just like dopamine stimulus, the game moves too slow. And the NFL knows this. That's why they've got like Beyonce, because like it's gotta, they gotta like bring some real entertainment value here. So I think in the long term, like the 12-year-olds of today, when they become billionaires, are just going to be way less interested in these assets, even if nothing bad happens.
Sasha, when you're like a kid, some things interest you, tend to be higher stimulus dopamine things. Sasha and I have babies like the same age right now, by the way, within a month of each other. Like my baby I can get through about 3 pages of a book right now, maybe 3 or 4 pages of a book. That's it. Like after that, it's like I really have to be like driving the book, not interested in the book after that. When you're little, you have an attention span that's one thing. I think the right guys who are worth billions of dollars today who built that over their lifetimes, right? Who are buying these teams. I don't know that they would have been as interested in these assets when they were younger, but these are like legacy assets, right? These are the kind of thing that when you think about like becoming, you think about like if you were to buy the Celtics and win an NBA championship, when you think about the like reverence your city would give you, I don't know how else you could get that. There's probably literally nothing else you could do to be that beloved in Boston. And so I think it's true. There's a little bit of there's a cost, right? You're public. But I think a lot of these guys, like by the time you're thinking about investing in anything like this, you've done all the private investing stuff that you want to do. That's all like you're looking for something. You're looking for something very different, some very special thing. So, Kevin, what do you think? What do you think about future of? Do you think kids are like people who are children today? Will they care about? Will the NFL still be popular when they're?
Kevin's got teenagers.
Kevin,
it's perfect.
Okay, how do your teenagers interact with sports versus what you expected?
Yeah, I mean, I can't get them to sit down and watch it for sure. I mean, like my son's a climber. He'd rather be out climbing. I think a lot of them would rather be doing stuff than watching other people do it. But no question, attention span is lower now. So football game is 4 hours long, and it'd be interesting to see if this next like TikTok generation can sit down for a 4-hour game. So, but I would put money on that there's going to be more global billionaires in the future, and each of those comps are maybe like 1 or 2 comps a year. So is there just going to be 1 or 2 more billionaires that in the world that want to go after one of those assets? So yeah,
how many do you need, right?
Yeah, you just need a couple new ones every year.
And they don't even need to be new, right? Like a lot of these guys are building multiple team kind of platform ownerships, right? So you have like HBSC, Harris Blitzer Sports, or Kroenke, or whoever, right? So you don't really need new market entrants to keep it going.
So we got about 5 minutes. What's one topic that you guys wanted to hit? We could talk about kind of way future kind of stuff, like autonomous cars, going to Mars, or if there is anything
Kevin,
more
I have
recent.
a question for you.
Yep.
You had a question around autonomous cars, and it's kind of like, hey, when is it happening? But the truth is, Waymo in San Francisco is already serving more riders, I think, than Lyft, and maybe Uber's still a little bit ahead. So autonomous cars are here. Waymo's expanding this year into like 6 new markets as well.
Mm-hmm.
So I'm wondering, what effect will this have on urban real estate markets? Suppose Waymo comes to Denver in 2026. What do you think that does to the way the city's designed and how real estate works here?
Yeah, I mean, for me, like the suburban or smaller towns is a lot easier to understand. I think of like our office in Fort Collins. A lot of times you need like a 3-to-1 or 4-to-1 floor area ratio. So we have 3 times, 4 times as much land for parking as we do under the building. So if you didn't need that parking, I think values on all property go up significantly because you can build another building or 2 on that same site. You can double or triple the density. So that'd be huge, right? If you took every one of our property, and we're not really urban real estate people, you take every one of our properties and you make all the parking a developable lot. I mean, that adds, easily $1 million to $2 million on every property. I mean, that's a huge deal.
Does it though, or did you just like double the supply of dirt in a place that was short of dirt?
It would take time, like to develop that out, but I think that the reality, if we have a 10-year hold, 15-year hold, 20-year hold, I think you'd be able to monetize that at some point. But that's a good question then. Does that allow a lot more supply? So then actually, does that soften the market,
And is the bottleneck transportation, or is the bottleneck other infrastructure like water, I guess water and sewer is the only other one that I can think of.
Bottleneck in land use or needing
Yeah.
land for it?
Yeah.
No, I mean, yeah, I mean, usually you can put all that underneath. It's still Waymo's going to need drive aisles to go through and pick people up. You can put all your utilities in there. They're still going to have your setbacks and place to put transformers or condensers, but majority of it's all parking. So it would be a fundamental change in real estate. I know in urban projects, they're designing the parking in a way where it could be reused for other uses, which I think is pretty smart. Just think about that. If you take all the parking that have limited revenue on it, and all of a sudden you're getting full market rates, it's tough because some of that's underground, but some of it's above ground. But yeah, I think that would fundamentally change real estate probably than anything else I can think about.
How does it alter the interplay between urban and suburban areas? Like, does downtown Denver become more valuable relative to, let's say, I don't know, Westminster, Colorado, or less valuable?
Yeah, I've always been on the argument that I don't think we're going to get back to a full work from office type of scenario. Like I live in Greenwood Village. There's days it could take 45 minutes to get into downtown, another 45 to get back. So it's an hour and a half of my day. So am I creating an hour and a half of value by being in the office? And I think some days when I have internal meetings and things like that, but if I just need to crank out calls or work, I don't think so. But if I could sit in the back of a car and work and do calls and all that, then I'd be going. I'd go anywhere, right? Like if I could work in my car, I'd just take any meeting. I don't really care where it's at. So,
Well, guys,
I
a question I have on this though, how is this any different than today just taking it? Like I took a Lyft to work today.
mm,
My niece does not work at a law firm. She doesn't have a car. She mostly takes Lyft or Uber to work herself, or she does if it's way too expensive, she'll ask a family member to drive her. Like, where is Waymo transformative here? Like, Sasha, are you saying that like people in Denver, like Lyft and Uber is not enough for them, but when there's Waymo, they won't need a place to park their car?
Well, I think the reason why most people don't take Lyft or Uber today is price.
Right.
So if you say, okay, price drops by 50% or 30%, how many more rides occur that way versus driving your own car?
Is that your expectation for where pricing would? Is that what it is in San Francisco?
It's not there right now because the cost of the vehicles is very high, but Google has announced that they're going to dramatically reduce the cost per vehicle. And you have to assume that the labor component is probably more than half of the total component for Lyft and Uber. In fact, I mean, I can tell you right now, like Tesla rents Model 3s to Uber drivers, I think for $300 a month.
So
you
you're
add in
saying,
like
so you're saying,
insurance and fuel.
yeah, but you're saying if you take, I mean, insurance is not going to change, fuel costs not going to change, right?
That's a good point. Yeah.
So if you take labor out of it, you're saying, let's just imagine it's 40% of your cost with a Uber or Lyft.
I think it's
You're
quite a
saying
bit more because I'm telling you, your vehicle cost is like $300 a month. Suppose insurance and fuel is another $300 a month. I think your driver earns like $4,000 a month. So it's hard to imagine how prices don't plummet on.
let's go pick a number. Let's go with 50%. Okay. I think it's aggressive. I don't think your Lyft or Uber driver is keeping 50% of your fare, but so let's just say costs drop by 50%. You're saying that would be transformative, just like that's it. Like people are not going to want cars in Denver anymore on such a large scale if Uber and Lyft were half the price of what they are.
I think if a $20 Uber ride becomes below $10, I think
Let's just say
way more
$10 for
people,
our hypothetical, right?
yeah, way more people
$10.
way more people take those vehicles.
yeah,
I mean,
I just think like when I need to go to Fort Collins,
Amen, yeah.
and Uber is like 100 to $150 one way. So it's like, am I going to pay $300 for that ride? And I see vehicles being more customized too. Like I could ring one up that like has screens that I can plug my laptop in, and it's almost like a desk where I could work from. So I could see it be much more customizable. And I think some of the times in these smaller markets, it's harder to get. You could be waiting for 10 to 15 minutes. But if you knew is there for you, like a cab in New York, I think would change it.
Yeah, maybe another analog would be public transit. From my house to the airport, on most days it's like $34 to take the train. I'm sorry, to take a Uber, and it's $11 to take the train. And I wonder how many people would just stop taking the train to the airport if the price was closer.
Yeah.
And what is that interplay between public transit and real estate development? It's sure to change by a lot. I think people are already realizing that most of RTD's routes are vastly underutilized, that most of the ridership is just in a handful of routes.
Yeah. Yeah.
But are people like planning TODs, or I don't know. It just feels like community planning is about to be disrupted in a major way.
Yeah. But things take longer than we expect. How far out do you think that is?
Well, we can speak more specifically about RTD. Their budget in Denver is $1.3 billion. And the question is, how long are voters willing to stomach that spend every year when they see mostly empty trains and buses go by them? I don't know. I mean, 5 years, 10 years, but at some point they just say, why are we taxing ourselves for this?
Mhm. Well, thanks guys
Yeah.
for joining me today. We'll put your info in the show notes if anyone wants to reach out to you, and we'll make sure to have you back on a year from now, and we'll rewind all your predictions and see how many came true. So appreciate your time, and see everyone else next month.
Thanks.
See ya.